Hello, subscribers. Thanks very much for joining me on this video. I thought I'd there was a question on my last video where someone had actually asked me if what caused the 1980 spike back here. So I did a bit of research and I thought I would share it with you. Those watching the channel right now, thanks very much for taking your time out to come and have a look at this. Hit that subscribe button when you get a chance, or for those obviously just dropping in, please feel free. Steve Rice. Hey, Steve, how are you? Hope you can hear me okay. Looks like, yep, he's there. Hey, Steve. Hopefully you can hear me okay. I don't know how, I don't normally live stream during the week, so it'd be interesting to see how many people drop in. We're going to be looking at this very interesting, where this little thumbnail is right over here. We're going to be taking a look at that. So that this spike here and what caused it. Silver Wolverine. Hey, Silver Wolverine, how you doing, buddy? Thanks very much for dropping in. There was a question in my last video where someone asked about the 1980, what caused the 1980 spike in silver. So I did some research and I thought I'd share that with everybody. But yeah, so we're going to be looking at this section here. I've got an article here that we're going to take a look at as well. Again, those that are watching us now, thanks very much. Don't forget to hit that subscribe button and like the video as well. Hopefully you do. Right, we'll wait for a few more people and then we'll get ourselves started. How are you guys doing? Obviously during the week, it's probably what, lunchtime there. Qualed Pesca's in the house. Thanks very much for dropping in. So we got 3 people. I think overall, I'm not sure on the. I think everything's up. Silver and gold is up at the minute, but not by much considering the fall. But silver price there, $15.12 apparently. So we got 3. Steve Rice, can't stay long because of work. Yeah, I pretty much thought that. Hence why I normally live stream during the week, during the weekend, because there tends to be a lot more people around. But I suppose anybody can watch this afterwards. I'm going to crack on with this. I found this fantastic article called Silver Thursday, and it's available at the Britannica. It's an encyclopedic website where you can look up history. So we're going to take a look here. So it was nicknamed Silver Thursday. So it was the dramatic fall in the price of silver on March 27th, 1980, following the Hunt brothers' attempt to corner the market. So again, the difference between, if we go back to the screen here, you've got in 1980 you had the price there at 37, although it says apparently it went up to $50 an ounce, but there it is at 35. Maybe it did initially, but anyway. And then it also went up here. So the main, I'd say, what is familiar with these two is both of them, there was a degree of manipulation involved in regards to both of these spikes. So today we're going to be looking at the 1980, and then if we have time, we'll have a look at the 2011 increase. So market manipulation was the main cause of it back in 1980, and it was following the Hunt brothers' attempt to corner the market on the metal. So if we have a look here, apart from a handful of reigning monarchs and despots, Nelson Bunker Hunt, who was born in 1926 and died in 2014, was the richest man in the world at the start of the 1960s. And like his father, the legendary oil man H.L. Hunt, Bunker gambled big and got lucky. By 1970, although his wealth was accumulating faster than he could spend it, he foresaw a volatile economic future. Prevented by Franklin Roosevelt's 1933 prohibition on U.S. citizens owning gold. And that was the Gold Act back in 1933. Let's check the chat. We've got a few more people in here. Jeremy Saunders. Hey, buddy. Thanks very much for dropping in. Hey, we got VC Coins Nevada, DB Stupid, John RMS. He says lemonade. Let's have a look. Thanks very much, guys, for joining me here. You can either, I don't know if you guys are at work, you can obviously just put it on microphone if you like. You don't necessarily have to have to watch this. Okay, so we've got the Gold Act in 1933, which was a prohibition on U.S. citizens owning gold. Bunker and his brother William, who was born in 3 years later in 1929, chose silver, then standing at $1.50 per ounce. So again, not a lot of money really, as their speculative hedge. Their initial caution vanished after Colonel Muammar al-Gaddafi nationalized the bunker's Libyan oil fields in 1973. Furious and paranoid that paper money would soon be worthless, the Hunt brothers then bought future contracts on 55 million ounces of silver. 55 million ounces of silver. DB Stupid says that the Hunts bought silver because it was not legal to buy gold at the time. Keep that in mind. Yeah, thanks very much. You're obviously familiar with this, DB Stupid. Okay, so so they bought future contracts on 55 million ounces of silver, eventually accumulating an estimated 100 million ounces. 100 million ounces of precious metals, or it says of the precious metal. But instead of selling contracts like normal commodity traders would, they took delivery of the bullion. So they took delivery of 100 million ounces and chartered 3 Boeing 707s to air freight it to Switzerland. Now, first of all, probably the greenies at that stage probably weren't happy about that. You could just imagine what sort of carbon emissions that were unnecessarily being used at that stage, and particularly to air freight 100 million ounces of silver. By 1979, correlation with 79 there, they had engineered a genuine shortage of the metal. The Hunts owned $4.5 billion worth of the shiny, glittering silver, safely stashed in the Swiss vaults. Still, the price climbed until January 17, 1980. An ounce cost $49.45. Such rampant speculation and profits triggered new government oversight, prompting the Federal Reserve to suspend trading in silver. So DB Stupid says at first they bought the physical and it didn't move the price, but when they tried to use the paper market to force a true price discovery. Gotcha. VC Coins Nevada says, I remember selling over 100 ounces for $48 an ounce. Fantastic, buddy. Anyway, let's get back to it. See where I am. The boom was suddenly over, but the Hunt still had to honor contracts to buy at prices of over $50 an ounce. The day the market plunged, March 27th, silver fell to $10.80, the metal's biggest single collapse, upon losing some $1.7 billion worth, prompting the bunker to quip. $1 billion isn't what it used to be. The Hunts had become then the greatest debtors in financial history, and though New York banks allowed them $1.1 billion in credit towards clearing their obligations, they were personally bankrupted and later convicted of illegally trying to corner the market on the precious metal. The brothers were fined $10 million each. I mean, what's 10 million just to people who are worth billions? It's like pocket change. In addition to the millions they owe to the IRS and banned from future trading in the commodity market. The Hunts had gambled that silver was undervalued, but they failed because they had made the price to silver too attractive for its own good. Now, that resonates in regards to our current market, because everyone's hoping that that we foresee that, yes, this was speculation that caused that price to rise. So therefore, those huge rises are just not what people want in the market. You want that steady, slow kind of increase. So anyone looking to get sort of rich quick on silver, keep dreaming, buddy, as far as I'm concerned, because it would be sold. There'd be, the moment you get that big spike, people will be selling it straight away. There's got to be a more sustained level of increase in order to sustain those high levels, which we don't. Well, obviously we're struggling to see at the minute. But so the Hunts gambled that silver was undervalued, but they failed because they made the price of silver too attractive for its own good. Stephen Heath's in the house. Hey, Stephen, how you keeping? Thanks for dropping in, buddy. DB Stupid says when the silver price run was happening, people were standing in line to sell the family silverware. That's interesting. Well, straight down to the metal dealers. The rules were changed on them. Take note: the paper market can be used to break anybody trying to make a price run. That is pretty much it. I mean, if you look at what happened to these guys afterwards, there were obviously a lot of people that were very upset with them, and they basically took them to the cleaners as well. So it could have also been that maybe they were someone had leaked information in regards to what was happening to them, and then that's pretty much what happened. Maybe insider trading, maybe to a degree, where these guys were caught out a bit too early, and then they pretty much lost it. And maybe people were betting the other way. Cool. Dime Digger's here as well. He says he's still working away, but he will listen. Awesome. Thank you very much. Okay, so to pay off his staggering debt, Bunker was forced to sell his beloved stable of thoroughbreds horses, 3 of whom were named Extravagant, Goofed, and Overdrawn. That was another thing. There was this particular brother. He had pretty much built a fairly good name in regards to horses. So obviously at this point he was stupidly in debt that they obviously he had to sell his horses in the end as well. So only bet what you're prepared to lose. That is probably the key. Or only go as far. Anybody investing in anything, know what you are prepared to lose. Simple as that. It says here, William Herbert remained a billionaire into the 21st century, so obviously still fairly well off. The character J.R. Ewing in the original TV series Dallas, and the Dutch brothers in the movie Trading Places, that was the movie with Dan Aykroyd and Eddie Murphy, I believe it was, all drew inspiration from the Hunt family and their larger-than-life careers and personalities. And then it goes into a bit more information here. It says here, Nelson Bunker Hunt, the American oil tycoon, was born in February 22nd, 1926, amassed an estimated fortune of $8 to $16 billion through oil revenues, other investments, but lost much of his wealth in the 1980s due to the disastrous attempt to corner the silver market. And then it's also got some other information here, Franklin D. Roosevelt, and then it's also got some information about Muammar Gaddafi. Yeah, I thought that was an interesting article. Switzerland, obviously, it's got some information about Switzerland as well, the Federal Reserve System, and contributors. I thought that was something interesting I'd share with you guys. And then we're going to take a look. Actually, I suppose now that we've got some time, I think it's only been, it hasn't been very long. I've got Yankee like sending me messages here as well because he's busy looking at he's busy getting me a few things. Sorry. So we're going to take a look at this next one. Okay, so this is the 2011 massive spike, and again that was also based on manipulation. However, just slightly different in regards to it. So we've got an article here that's obviously more than a few years old. It's by the Bullion Vault. And it says silver $50 3 years after the shortage. Okay, so if we have a look at it, silver prices hit $50 3 years ago. Oh, sorry, this is obviously the old 3 years ago this week, and this is obviously when the article was released in 2014. It was on April 25th that the silver traded $49.8 per ounce, which is very similar to what it was trading at back in 1980. So it's amazing. It didn't really break the 50, even though they call it. Traded like in the $50 region, but they were pretty much in that sort of region. DB Stupid says interesting topic would be the rush into the Swiss franc in 2009. They had a solid currency that the world wanted to rush into. They had to print and peg to the euro I think, to stop the inflows. Okay, I'll definitely take a look at that. Let me factor in two other important bits: USA cost of silver versus UK. Not talking about tax. This is in regards to our dollar and pound value. So one market can go up whilst the other goes down. Very good. I doubt we're gonna hit another lick like that again. They changed. Okay, that's Stevie Stupid saying they changed the rules on the COMEX. You could only sell, not allowed to buy more contracts. Yeah, correct. And that's what pretty much the Hunter brothers couldn't. They couldn't really do anything with their contracts, but yet they had to honor them. Okay, so if we have a look here, I'm going to go back to the chart here. Okay, so we've got this very nice massive spike all the way up here, pretty much from about this level here, which was $18.27. Okay, so let's have a look. So April 2011, the silver traded at $49.80 in the New York spot market. That means silver traded $50 somewhere. There was a lot of business going on at that time, but after holding about $49 for the rest of the week, silver prices began to retreat fast. One of the factors was that traders were looking at the gold-silver ratio. Some believed that silver had much undervalued versus gold and would recover its historic price parity of about 16 ounces of silver per 1 ounce of gold. Funny enough, that was actually reevaluated in the 1920s. They brought it up to 20 to 1, but 16 to 1 was last seen pre-1900s. So even though silver hadn't, sorry, the phone keeps cutting off. There we go. Right, so even though silver hadn't been so expensive in terms of gold for 28 years, and even though dollar prices had doubled since 6 months, some traders felt that the move wouldn't be complete unless silver traded above the $50 mark, which it hit in 1980. The silver market environment of the 2011's run to $50 was, however, very different to that of the 1980 run. The principal driver back then was the continued inflation in consumer prices, plus the attempt by Nelson Bunker Hunt and his partners to corner the silver market, an attempt eventually brought to an end by the efforts of the Federal Reserve Bank and certain members of the Commodities Exchange. Sounds like collusion. 30 years later, the global economy again faced serious concerns. Not only was the US economy still reeling from the mortgage crisis and the 2008 Lehman Brothers collapse, now the Eurozone faced a breakup, as Greece, Ireland, Portugal, Italy, Spain all reported serious problems with their finances. In the United States, confidence in the economy continued at a record low. Just checking here. Hey, Coinsense and Nonsense, how you doing, buddy? Thanks very much for dropping in. We're just going over this article. I'm at work, so can't stay, but thanks very much for dropping in. Looks like DB Stupid there. Think about the Hunt brothers. If silver was overvalued, the rest of the world should have gone short in theory. Didn't happen. Why? Yeah, I still think people made money there somehow. Either betting against it in regards to the price would drop, and maybe that's why the price fell so suddenly. So all of a sudden you've got a shift in regards to what level you see it. So all of a sudden, right, let's get back to it. In the United States, confidence in the economy continued at record lows. News out of Europe only heightened concerns of another financial crisis. Then the Fed announced another round of quantitative easing beginning in November 2010. Silver coin sales by the US Mint hit a monthly record, surpassed only by early 2011 surge in private investor demand. Because this new quantitative easing meant printing more dollars, or rather than electronic equivalents, as the Fed chairman Ben Bernanke had said, so in the minds of many investors that the dollar was under the gun. Seeking safe haven assets likely to hold or grow their value during the prolonged inflation became of paramount importance. So obviously they were concerns that the dollar value was going to the dollar value was going to drop. So it was of paramount concern to start looking at other options and particularly seeking that sort of safe haven asset, which everyone knows is precious metals at that particular point. Internal to the silver market, meantime, there was reports that seemed to support a bullish long-term view on silver's industrial demand. The photovoltaic industry at one began consuming silver in a much larger quantities than in previous years. Solar panel production started with silver paste that requires a finer grade of silver than the main wholesale market trades. As the sector's growing demand sucked in these 4/9 fine bars, it drew a lot of attention because while there was no shortage of the more common 3/9 fine bars, there was a shortage of the immediate supply of the higher purity. And because of the growing demand and the coincidental rise in the silver price, the story stuck. So obviously there was a fake shortage supply issue, technically, obviously only of the higher grade at that point. So obviously majority of the silver bars, there was the more common bars, which were 3/9 fine. There was oversupply of that, but there was a major shortage of the 4/9 fine silver. So just check here. Steve Rice, I was in high school back then chasing cheerleaders. Sondel Sven is here. How you doing, buddy? Thank you for dropping in. Silver Hustling 13 says working, so I'm just passing through. I will be listening as usual, Senor Blimey. Thanks very much, Silver Hustling 13. Hope you enjoy the podcast, I suppose. The then vice president of the sales, the Heracles Precious Metals Management in New York, was asked to debunk this myth. The idea that the photovoltaic industry was driving the silver price higher. For clients starting in January 2011, the bottom line was that solar panel demand was only beginning to fill a major hole left in silver offtake by the ever-shrinking photographic industry. Obviously, the photographic industry used a fair amount of silver in regards to its industry. And I suppose because everyone was moving more digital now, there was really no need to use any form of liquid in regards to processing pictures anymore, because everyone could just print them off, or you could go into a machine and plug in your SD card, and you wouldn't necessarily need the chemicals in order to agitate the photo card to generate the image. So obviously you've got one industry declining. Now technically, obviously, when there's a decline and you've got oversupply, price factors there. So what happened was solar panel production came in, and there was an offtake in solar panels, which sort of filled that hole at that particular time. I'm just checking this, which had previously been the world's largest consumer of silver for many decades. So obviously, the photographic industry had been a large consumer of silver for as long as photography had been around. If you think about it, they're putting in many decades. You could even go as far back as maybe 100 years, possibly. I'd say very easily you could probably go back 100 years. I wouldn't even say decades. Decades, for those who know, it's 10 years. Still, the physical supply anomaly between the standard wholesale bars and the finer 4/9 fine metal did give the impression that stockpiles were tight. Additionally, as that story snowballed, the incredible private investor demand for the small bars and coins in silver due to the economic global crisis caused immediately available retail production to go to higher premiums than product for later delivery. That carried into futures into the market in February 2011, and that's pretty much where we started to see a massive increase. Damn, sorry, switch that off again here. Right, just checking the chat. Anyone got any questions at the minute? Let's see, we got Cyril Sven says hi to all the peoples in the chat. Sono Senj wishing you good luck and thank you. Well, thanks very much, Sondel. Appreciate your comment. Okay, so why? Obviously, so that carried the market into the that carried into the futures market in February 2011. Why? When demand exceeds expectation in physical goods, often it's difficult for manufacturers to meet new customer orders quickly. If that makes supply become sporadic, it gives the impression that there's a shortage of raw material, when in reality there is only a shortage of the product. DB Stupid says eBay bucks gold deals dried up last night. Nothing good left. I'm not surprised because the price of gold dropped so much. You probably got everyone cashing in all their bets. But as silver prices headed for $50 per ounce 3 years ago, obviously back in 2014 when this was done, the idea of a vanishing silver supplies, rather than just tight supply of the small bars or coins, was frequently promoted by many retail distributors as part of their sales pitch. So obviously, you know, even when I look at my own industry, when you got a customer in front of you, you want to get that deal closed, you're going to try. I'm not saying you're going to necessarily lie to the guy, but here's the guy's probably being told there is a shortage, but he didn't say of what grade. So it could be the same as saying, yeah, you got to buy this. You got to buy this car today, because there's a shortage. A shortage of what? It could be a shortage of petrol engines. It could be a shortage of diesel engines. Yes, there could be a shortage. It could be a small lie in regards to what the shortage is. So it could be that, in for instance, they were telling the customers there was a shortage, which was true, but he didn't go into much finer detail to say it's 4/9 fine metal that is in shortage rather than the 3/9 fine. So obviously they were using it as their sales pitch at that particular time. DB Stupid says, beware a metal that needs a sales pitch. Maybe back then, I suppose, when you look at it in 2011, they wanted people to keep buying, pumping up silver, pump that silver price up. You know, you're going to make up some kind of story like these guys did. Okay, then it continues. Backwardation is when the price of silver in the future month is cheaper than spot or the immediate month. Silver prices normally trade in the inverse position, because the seller of metal has to pay the cost to carry the inventory until settlement, and those costs are reflected in the price. So this early in 2011, backwardation, suggesting a lack of immediate available supply of silver, puts another feather in the cap for the silver bulls. So obviously it created a bit of a bull run artificially. So let's just say if anyone had 1,000 ounces of silver that they'd bought for $18, and then of course it basically doubled, and maybe even to a point it even tripled, it would have been nice to sell that 1,000 ounces right at the top. Steve Rice says Provident has 1 ounce generic rounds for 49 cents over spot. That sounds like a pretty sweet deal if anyone's looking at buying any. Sondel Sven says, in your country. I presume that's a question to Steve Rice. Okay, so let's take a quick look, however, at the actual statistics of physical demand versus supply of silver. So obviously, for those listening to this, there's a chart. You guys can, when you get home or whenever you get a chance, you can have a look at the chart. The industry did experience large growth from 2008 to 2011. In fact, that time period, the industry grew by a whopping 338%. So obviously, if you had, let's say, when it first started in 2008, if you had an ounce of silver was worth $10, it went up by 338%. It'd be worth $33. And that's according to these people in regards to what the price went up by. This was, of course, astronomical for the solar industry, but for silver demand more broadly, it barely registered as a fundamental market driver. So it didn't really register, even though it was there was quite a significant amount of demand, but it didn't really register in regards to the price. And if you look at this chart here, it says silver implied investment versus supply. You've got these big bars that are behind it here. That is the supply. Then you've got this kind of silver line which runs across. That is the average price. And then you've got demand, the shortfall as a percentage of supply. And that starts here on the left. So that's in the red. So obviously you can see is that supply outstripped demand by almost 300%. So there was an enormous amount of silver. But obviously I presume this is probably in general the silver that was available. If they'd done a chart at 3 nines fine silver, I don't know what the demand would have been for that, but you probably would have seen a massive demand and very little supply chart. So this is very much a generic chart for how much silver was in the market. And then you've got the price here on the left. So we can see this white line as it goes up here in 2011, and then it started to slow down in 2012. And that's pretty much when you probably saw that adjustment, but people realized that there was actually a lot of supply in the market. Sondel Sven says, long and hard story here and there. It is all the same in all the countries. You don't have to search, not promotion. Maybe he's talking about pricing. Need to buy some melting silver. Yeah, that price is hard to beat, Steve Rice says. Okay, so looking at the chart of supply and demand for silver in 2003 to 2012, we can see the supply met demand annually. So obviously, again, you can see here, that's the demand bar is the red line. And then you've all these big lines going up, all the bars going up. That is the supply, and it never once went below the demand zone. There was never any shortage. In fact, the silver market was in a significant surplus 6 times over that decade. So, like I said, I went 300%. Well, it was far more than that. The leading data providers in the silver market, the Thomson Reuters GFMS, used to call this implied investment. It was, as they said, the residual between supply and demand data they collected, meaning it was a balancing item included so that the supply and demand matched whatever the shortfall or excess recorded on the visible numbers. The GFMS are now calling a spade, starting with their new gold survey in 2014. Their new silver survey, due to launch next month, obviously back in 2014, through to the Washington-based Silver Institute, will surely make the same change, as you can see. If we view the old balancing item of implied investment as a market surplus or deficit each year, the excess of supplied metal over visible demand ran nearly 15% in each of the 2010 to 2012 years. Just checking the chat. VC Coin says, yeah, everyone wants too much for shot silver. I would have probably thought that shot silver would have been the cheapest form of silver you'd probably get, wouldn't you? I'm sure you get that bang on spot price, or maybe a few cents over, or 50 cents over. VC Coins. Yes, investment demand grew along with the silver demand for photovoltaic industry, but even the combination of the two did not exceed the growth in supply, which constantly increased because of the higher prices in the market. Miners and scrap collectors were more than happy to increase the supplies. So like the ancient Roman writer Phaedrus said, things are not always what they seem. The first appearance deceives many, and the silver seeming shortage in spring 2011, which did so much for the spur that extra investment, especially from private households caught up by calls to buy now, time is running out quickly, was in truth no such thing. That is an awesome line there. So like the ancient Roman writer Phaedrus said, things are not always what they seem. The first appearance deceives many, and the silver's seeming shortage in spring 2011, which did so much for the spur that extra investment, especially from private households caught up in the calls to buy now, time's running out quickly, was in truth no such thing. So basically they were all duped. There was no such increase. Now, I bet you imagine that if you'd bought at nearly $50 an ounce back then, and then all of a sudden you're like, yay, geez, we've got all this stuff, the value is going to go up. And then all of a sudden it drops back down to levels in the 18s, the 19s, in that sort of region. I mean, I'd feel pretty sick after that. I mean, you'd probably find that people maybe even cashed in their pensions and that and thought, let's buy some silver. I mean, this is going up. Let's make a quick buck. These poor guys made this investment based on nothing but FUD or complete nonsense in the market. Jeremy Saunders, is it because there were more people pouring silver that they have upped the price? Interesting, Jeremy. There's probably more demand for it, so it could well be. Maybe the pouring community has helped with that. In the same chart above, we will note the fabrication demand increased in 2012. This is no surprise considering the volatility of the high price of silver in 2011. This caused what is called thrifting in the industrial sector. Is anyone familiar with that term, thrifting? They might take an e-check for the cash price. Is anyone familiar with that word, thrifting? Thrifting is what manufacturers do when the commodity used to produce their products exceeds expected costs or becomes too difficult to manage due to the price volatility. To prevent losses due to the wild market prices, the manufacturers begin to invest money in attempting to use the least amount possible of the offending commodity. In this case, that offending commodity was silver, and the thrifting provoked by the high silver prices of the early 2011, in good part provoked by that phantom shortage, led to the lower industrial demand, as we see here in part 2. Here it is, part 2. Silver's price looked overdone for many players at $50. Its drop surprised even them, so they were extremely shocked that the price of silver had dropped by many that weren't expecting it. The photographic industry used by the solar industry played a big part in the metal surge to $50 an ounce. That was back in 2011, writes this fella. His 2-part analysis of silver's peak 3 years ago. Now, again, this is Bullion Bulls. You guys are more than welcome to check that out. I'll put the details in the description later on. But while the PB's industry's role in creating what many investors saw as a silver shortage 3 years ago, back in 2014, which is 3 years from 2011, was far more talked about than True Solar did, then play a very real part in the fundamental drop in demand, which resulted from that spike. 3 years since April's 2011 jump to $50, the energy industry has significantly reduced the amount of silver needed for the photovoltaic paste in solar panels. So obviously they've reduced the amount of silver that they use in regards to the making of the solar panels. It's like a silver paste. If you guys have looked at a solar panel, you'll see that sort of these fine silver lines. I wonder if you could remelt that stuff, you know, if someone was recycling it. I wonder if you could scrape it out and pile it up and then hit it with a blowtorch and make some silver. I don't know if that would be possible. Thrifting, yeah, Jeremy. Yeah, that's it. Thrifting, buddy. The thrifting means that the solar panels of the same dimensions produced after 2011 contain significantly less silver than the older versions. Because obviously, because of the higher demand, or should I say the higher price of silver, they'd learned to make the same solar panel, but with less silver in it. So due to the high price of silver, they literally were able to condense or they didn't have to use as much silver as the older ones. In some applications, up to 80% in some applications, because the investment surge which drove prices to a higher, fundamentally dented silver's appeal to a major consumer industry. In fact, it dented silver's use across the whole industrial applications which rely on it. Full year 2012 demand from industry was, according to Silver Institute data, down by 7% from its peak of 500 million ounces in 2010. So you can imagine, I suppose, if you think at 10%, what a reduction of 500 million ounces by 10%, 50 million ounces less they were using. I mean, that's if it was 10%, of course. In contrast, for investors, it was the speed of the drop in the silver prices following its $50 top, which drew so many, that drew so much ire. Some proceeded to persist, which claims that US regulator, obviously the regulator, the CFTC, requesting investigations, even bringing a lawsuit against major bullion banks, JP Morgan and HSBC, alleging some kind of manipulation. Buddy, there was so much manipulation in that market. How can they say alleging? Within the last 12 months, both the CFTC and the Second US Circuit District Court of Appeals in New York have found no indications of collusion or criminal abuse of the silver market by any party. What do you think? Someone got paid off there? This was no surprise to the industry experts, but the speed of silver's plunge did surprise and hurt many investors and traders. The silver market is much smaller than the gold market, and at times suffers from great volatility. I wonder if it was brought on by that session. It wouldn't surprise me. Comparing to what was called the open interest, which in a number of contracts open on any given business day, the COMEX futures market, gold is at least twice the size of the silver market. In London, over the counter market, which participants deal with each directly, other than through standardized contracts on the formal trading exchange, the value of gold trading has averaged 8 times that of silver over the last 3 years. This means that the trade considered small in the gold market may actually be large in the silver market, because it has fewer participants willing to buy or sell at any given price. And here we go. We got the silver open interest. It says 2011. There's a graph there. It's got I presume that's the price on the left, and that's, I don't know if that's ounces on the right. Silver price is in that pale blue or silver. COMEX futures contracts, that's when it opened. Interesting enough, even though it took a massive dump, silver was still on very much an uptrend at that particular stage. So it dropped down to just about $35 and then slightly went up and then slowly traded sideways and slowly started to go back up. And that was in September 2011. Interesting enough, during the price rally from September 2010 to the high in April 2011, open interest in the silver futures contract, though it did grow, was not astronomical or out of proportion to previous historical figures. So while there was a good participation in the marketplace, it was not out of the norm for that time period. Sorry, I hope I'm not hopefully you guys haven't fallen asleep. I'm sure you guys are still listening out there. Just haven't seen any comments for a while. Let me know you're still alive. Thanks, gents. The first sign of money was departing the market, however, came in the 25th of April 2011, when the CME first raised margin requirements on contract holders. This meant that you needed to have more cash on hand to hold the same position you had the day before. The next big decline registered in the market participants then coincided with another increase in the margin requirements. This was nothing abnormal or suspicious here. The exchange needs to make certain that the holders of leveraged positions are viable counterparties in a volatile market. So obviously just wanted to make sure that the people who were exchanging or trading silver were reputable companies. So they asked for greater protection. Holders who don't have the financial means to meet those new requirements then liquidate some or all of their contracts. So obviously the ones that didn't have that extra money to back up what they were buying had to sell and get out the market. So that's again when the price dropped, because they couldn't sustain their level, so they had to get out basically. Increased silver margins in April and May of 2011 did of course take a toll on the price, as would be expected in an extremely volatile market. Liquidation added to the same downward momentum and kept prices subdued moving forward. Between the 25th of April and the 27th of June, COMEX open futures, silver futures, shrank 23% as the price of silver dropped 29%. It is apparent that the weakening price combined with the new margin requirements were of a direct influence on open interest. So mainly because of them having to hold money to reassure that they're standing, they didn't have that. So obviously then those people sold and got out. Slow Stacker. Hey, Slow Stacker, how you doing? Hey, buddy. Hope you're keeping well. Yeah, that was some show you and International Stacker put on that other night. That huge mound of silver junk that you had there. Man, that was some mound. Were you guys able to find any key dates at all, just out of interest? Lincoln DMZ. I am just here for a few. Okay, no problem. Looking at the preceding chart, let me just make sure this is the new margin requirements. Yeah, there we go. Looking at the preceding chart, you can see the price was more volatile than the contract liquidations. Additionally, looking at the holdings of SLV, the largest silver exchange traded trust fund during that period, it was still more stable again. It was still stable again, declining only 15% to a balance of 309 million ounces. COMEX warehouse stockpiles of silver bars only fell by 2.8 for a balance of 99 million ounces. Excuse me. This would make it apparent that the violent price swings were not caused by any direct fundamental factors from a physical investment holdings. So what led the selling? So what caused the major sell-off? Further up the supply chain, the spike was, of course, an opportunity that silver miners could not resist. If they think the market is overdone, they need to sell metal for future delivery. And that is exactly what started to happen. In an article published in February 2011, the Wall Street Journal reported one such company, Boliden, was taking advantage of what they believed were already very high prices versus the cost of production. So many public miners would have a greater difficulty to do so, as they'd come under fire from shareholders in the past after the lack of participation of the initial upward commodity sector, which began in 2006. Hedging for many had become a bad word, but at high levels in the beginning of 2011, it looked it would have behooved them to buck the status quo and make the sale. Robbie Nationalist is here. Hey, Robbie, how are you doing? I'm off out, unfortunately. I'm just wet up at night. I know it's absolutely bucketing down this side. Jeremy Saunders says it's wet in Wales as well. Slow Stacker says I think one or two in there, just too much to go through. Yeah, I suspect it's probably overwhelming. It's like when you build a huge Lego set, and you've got 3 sets piled in one, and then you got to like sort through all little bits, and you got to put the other blocks aside that matching colors, and I suppose your mind gets fried. But it looked like you had a good whiskey as well lined up there, man. I would have thought you guys would have gone on for the night. Anyway, back to the so come March 2011, there was many analysts also calling the silver market too high, too hot, and a bubble. Analysis from HSBC Global Asset Management added to this growing sense of an impending market correction. So in hindsight, of course, we all knew it was coming, but some investors, led by claims the $50 silver shortage in 2011, became more caught up in the bullish rhetoric than others. So obviously them just not really looking into the market anything further than what they were seeing. So basically, people were buying up based on what they saw as a silver shortage. Were caught up in this whole bullish wording than others, and some were obviously still buying. What surprised everyone was the volatility in silver. Silver's initial drop tempered into summer of 2011. Only by gold's separate, smaller but equally dramatic surge to $1,900 an ounce, and I certainly remember that day. Day traders and high-frequency hedge funds love volatility. This is because at times the great price move, more opportunities arise for them to get in and get out of the market with quick profits. So that tends to be that sort of buying and selling. You buy high, sorry, you buy low, you sell high, not buy low, buy high and sell low. Yeah, so you want to buy low and sell high. This is because at times of a great price moves, more opportunities arise for them to get in and out of the market and obviously take quick profits. Given the huge spike in COMEX silver trading volumes, we can assume that such short-term players were primarily buying at the price as the price rose, and selling while the price dropped, tracking and extending the market's direction. And obviously, there's a chart here. It's got the COMEX silver volume 2011. It's got the silver price here, and it's also got the volume of the futures that were being traded, and how amazingly quick it all dropped. Definitely worth a look if you guys are listening. So here, with hindsight, are some fundamental geopolitical and economic considerations unique to the silver market's $50 peak of April 2011. The story was good at the time, though many market people, including me, kept scratching our heads as the price kept rising. So obviously everyone was still wondering, like, why is the price still going up considering it's complete and utter fake news? The way I'd look at it, however, the market is always right. So obviously the perception was that the market was still going up based on news that wasn't necessarily correct at the time, but the market looked like it was going in the right direction. All participants' actions dictate where the price goes. So obviously, for instance, if 1 million people now have started to buy silver, and all of a sudden you had, like, if everyone bought 100 ounces of silver, you see a massive spike in the price. That's I suspect. All the participants actioned, which is why you step aside when you don't understand the level. It's got to. So I read that back. The way I look at it is, however, the market is always right. All participants' action dictates where the price goes, which is why you step aside when you don't understand the level you got to. So it basically means, like, whoa, step back, think it through, and go, hang on a sec, something's not right here. There could be a correction coming. Silver looked way overdone, but the real price at any given time is what the market will bear. So it's very much like that word. It's only worth what someone's willing to pay for it. So at that particular time, there were loads of people who were willing to pay for it, even though it wasn't worth that. Was silver worth $50 an ounce? That's just the question I'm coming to. Some buyers thought so, but I fear many more probably never gave it a thought. Someone will no doubt pay that much. Someone will no doubt pay that much again. What silver is worth is determined every day in what we call the marketplace. When I want to know what it is worth, I look at the last price it was trading at in the market, where I would participate. So in physical investment in silver, I look to Bullion Vault's order board, just like anyone else, using a simple low-cost platform. Okay, that's obviously some kind of app this fellow uses. So I'll read that again. So was silver worth $50 an ounce? Some buyers thought so, but I feared many more probably never gave it a thought. Now that's obviously the writer saying that. Someone will no doubt pay that much again, which obviously he's pretty adamant that more than likely there'll be a price hike up again. What silver is worth is determined every day in what we call the marketplace. When I want to know what it's worth, I look at the last price it was traded at in the market, is where I would participate. So in physical investment silver, obviously he looks at this particular program. It's called Bullion Vault's order board, just like anyone else using a simple low-cost platform. The Vice President of Business Developments from 2014, that's this fella who wrote this article. This a fierce advocate for retail investors and a regular speaker at the industry and media events. But I thought that was very interesting. It'll give you a perception of what happened in the market, both in 1980 and in 2011, and what caused that jump. So as we see, that anomaly in regards to the could be taken out completely, because it was based on news that there was a shortage in the market, but technically wasn't, even though there was, if you know what I mean. Those looking for 3 nines fine. Silver would have probably, or should I say 3 nines fine silver, would have sought an abundance of it. However, those looking for 4 nines fine silver at that stage would have found it hard to get hold of. Blazing Doob, Yankee Stackings here. Yankee, send me some more pictures of that coin when you get a chance, man. I don't suppose you got anything else, or was it just that piece? Steve Rice says Yankee. Okay, so we're up to 14 here. And then obviously back in 1980, you had guys who wanted to corner the market. So they started buying futures, silver futures, and then built up a huge stack. I'd say they were pretty big stackers. 100 million ounces. And they flew it over to the Swiss banks there in Switzerland. Kept it under lock and key. The price rose. They invested something like $1 billion. It was initially they invested $1 billion worth into silver back then. It was then worth almost 4 times that. But instead of selling it like any normal person would have done, they kept it, hoping that the market would have kept that value going up, because they created a false shortage in the market. However, they were caught out. Obviously, the government stepped in. They stopped trading in silver. They had to honor their contracts, their $50 contracts. The price of silver plummeted down to like $10 an ounce, and it basically bankrupted these fellas. So it's a very interesting story between the two, and how market manipulation can cause these two prices here. Hopefully, for the future of silver, we won't see any more market manipulation in regards to that sort of news in these two areas here. Hopefully, we can see consistent growth in the market, consistent demand in relation to what is happening out in the world in regards to global debt, physical value. Is your money that's in your bank account, is that something you consider wealth? What is it that people consider as wealth? Is it something tangible that you can hold in your hand that was dug out of the ground? Is it something with a piece of paper with a bunch of numbers on? I certainly know what my wealth would be, or what my expectation of wealth is. And holding precious metals, that's one way to physically have something that is of value, that belongs to you, rather than just having money in the bank that has no backing by any precious metal. So I personally see a bright future in regards to precious metals as time goes on. But yeah, I'll leave it at that. Thanks for everybody for watching. Yankee Stacking, I'm glad I could get you that piece, bro. Yeah, I'm looking forward to seeing it, man. I'm going to check I'll check those pictures shortly. But guys, thanks very much for watching. I hope you found this very informative. I'm going to edit the title. I'll also include the 1980 spike. You're welcome to obviously play back the video. I hope you found it interesting. Thanks so very much for joining me. If there's any other questions before we close off, linking just a few shout outs for the guys here. Blazing Doob, thanks for dropping in. We've got Lincoln DMZ, we've got Jeremy Saunders, Yankee Stacking, DB Stupid, Steve Rice, Robbie Nationalist, Slow Stacker, BC Coins Nevada, just to name a few. Sundell also dropped in. I think he's from Sweden or Norway. Sundell Sven. Thanks, Yankee. Thanks very much for dropping in. It's a very interesting article. If you get a chance, check it out. If you don't know what caused the spike in the silver price in 1980 and also in 2011. But cool info, my friend. No problem. Thanks, Steve. Have a great evening wherever you are. Don't forget to subscribe, like and comment. Hopefully you guys like it. I just wanted to get this done for you guys because I had there was someone posted a comment on the previous video I had, as they weren't really sure what caused the 1980 spike. So I thought I'd do a correlation between these two. And thanks for watching. And I'll see you on the next video. And also, don't forget my I'm going to just bring up my giveaway. Obviously, the 750 gold giveaway is it closes tomorrow evening. So guys, don't forget, if you haven't logged your favorite Silver Limey 79 video, that's from my channel. Get around there, post a comment. I'm going to be announcing that we're going to be doing a live stream on Saturday. There it is there, 750 subscriber goal, Royal Canadian Silver Maple Leaf giveaway. Get round there, put your comments in, guys. Silver Limey 79 out, and have a great evening. And I'll chat to you guys on the next video.